I have been warning for days that the market was likely to have a breakout in fear, and right now the VIX, aka the Fear Index, has 3 nested patterns, all indicating the market could be about to turn very red. This descending triangle pattern is indicating a breakout on the VIX to at least 23, confluent with this major resistance line. If we go that high, we will be breaking this main resistance line right here that formed with the August 5th, 2024 market crash. And if this is forming a descending triangle with the support area right around 15, then the breakout target would be roughly 50 points to the upside, potentially even higher than the August 5th VIX high. And if you need even more to consider, look at this multi-year falling wedge with this upper red resistance and lower support line here, whose resistance would even be broken as well. And this whole pattern would be targeting the upper resistance line here in purple. Now, if you aren't concerned yet, take a look at SPY. Notice how the peak on the VIX on August 5th directly coincided with SPY hitting this key support line in light blue. Then every time that the VIX hit a peak was also when SPY touched or approached this line and bounced sharply. If we see right here around December 20th on SPY, and notice how we hit this main resistance line on the VIX. Then on SPY on January 12th to the 13th, we got this major bounce off this main support line, while we simultaneously got this strong rejection near this main resistance line on the VIX. Then again on SPY around February 3rd, we got a strong bounce near the support line and got a similar rejection off of this resistance on the VIX. SPY is very close to this key support line again around 595. If we get a bounce here, SPY could head back up to the main resistance line around 613 to 614. However, there is the main resistance line here in dark red on SPX that extends all the way back to the Great Depression of 1929. And look where we are right now. I've covered this extremely important bullish channel with the upper resistance line in green and the lower support line in green in previous videos. Breaking the strong resistance line on SPY around 614 could open the door to about 660 to the upside, whereas breaking this strong support line could allow the multi-year rising wedge pattern to finally play out, targeting about 538 and possibly even lower. The lower support line of this big bullish channel is around 480, and it would likely be an insanely good buying opportunity if we ever got that low. With a strong enough negative catalyst, SPY could someday even see around 380, but that would be the result of an unimaginable economic hardship. QQQ has already broken back below this strong support line in light blue around 531, but it stopped at this previous resistance line of this symmetrical triangle here in yellow, right around 525. Will we get a reversal from here and continue higher or continue heading down? 505 to 506 could see a strong bounce if so, and around 495 would be the lower support line of this very significant bullish channel that we've been going over for multiple videos here in purple, and where we would likely see strong buying pressure. IWM small caps broke convincingly below the main lower support line of this bullish channel here in orange on Friday. There is a demand zone below it that extends from about 209 up to about 215 that helped push it back up into the channel the last time on January 13th. But can it do it again, or will old support become new resistance? Dixie, the dollar strength index, just hit the weekly 21 simple moving average around 106.50 and is dangerously close to the 100-day simple moving average around 106.20. Where the US dollar would likely see strong support. I shared in my recent community tab post as well as on X and StockTwits that this multi-week bullish falling wedge on Dixie will likely have huge implications for SPY and QQQ. Dixie could continue higher to around 107 even to about 107.10 before hitting this upper resistance line of the falling wedge. Will it continue to break out from there, being its third touch of resistance? If so, this pattern is targeting over a 2-point move to the upside from wherever it breaks out. I have my reasons to be bearish, but we can't deny that we're also near this key support level again. We're at a very pivotal point on the market. If we don't continue higher from here, we're going to continue much lower in my opinion. Again, I am not a financial advisor and nothing I say is financial advice. You should always do your own due diligence. Best of luck, cool cats, and God bless.